As far as I am concerned, my work is the same. I do my research. I oversee a firm, so a lot of economic activity is there in the firm which continue to happen. So all my work-related actions are continuing. There is no break in them. So it's just that I am physically restrained from moving out of my house. Otherwise, activity is very much normal. There is no change in what I do. I am not really of the view that there is any urgency to invest in this market. Whatever I want to invest for a long period of time, I have already invested. And whatever I am not convinced will do great, I will just gradually move out of them and keep my money so that I can buy once my conviction level in newer ideas goes to the adequate levels. There is no precedent to this kind of an economic situation where the economy comes to a complete halt and then again reprimes itself. Okay. Now, who is going to pump prime this economy back is $1 million question as far as India is concerned. India's pump priming is only restricted to the extent that it will keep the poor well-fed and psychologically strong. That is what India is going to achieve. Who is going to pump prime industry? Who is going to pump prime consumption? Who is going to pump prime economic growth is $1 million question. Because I don't think there is a concrete blueprint that has been put out in the public domain yet. Until such a blueprint comes out, I think that whatever investments or assessments we are making at this point are purely conjecture. I think that as an investor, one should have a clear understanding of where the growth is going to come from before he makes growth-related bets. On the contrary, if you still want to be invested, I would make investment bets in places which are defensive. That is what I have done. Those defensive bets I will continue to hold. Wherever the growth bets are there which can give better alpha to the portfolio, I will take them after I get clarity on how the economy is going to bounce back. At this moment, there is no visibility. See, I think that the valuations of mid and small caps are still expensive when you compare the economic realities. What you pay for the future, for the next 2-3 years, is still very, very high compared to what businesses can deliver in many businesses. Very, very few companies or sectors look good. And even those that look good from a valuation standpoint, we are not having visibility of growth yet. So you are basically buying something because the assets are cheap and hoping that growth will make those assets generate superior earnings. But there is an assumption there, right? So that is something which does not give very high comfort to take concentrated large positions at this point in time. So I think that will have to wait for some more time. I don't think there are any big lessons because I don't think an event like this is going to happen again in the next 50 years. This is just a freak event that has happened because I have not read or seen, except 1929, there has been hardly any event where, you had this kind of a sudden breakdown of markets globally. So the lessons really are more related to how you don't get carried away by investment performance. So that is a lesson which is an eternal lesson that keeps coming to teach us again and again. I think that in every cycle we are seeing people get carried away by performing parts of the market. I think this is very dangerous because price performance is not permanent and it is more related to capital flows. Whereas business performance is eternal. It is something that you can rely upon always. Business performance is going to dramatically change over the next 12 to 18 months across industries. So unless we are able to get a full grip of how that is going to change, we cannot move beyond a few very reliable, trusted, large businesses. You cannot go and buy small and mid-sized businesses where the vulnerability is very high, their fragility is very high because they can lose 2 customers and their business will look very ordinary, or even business can collapse, or if they don't collect their receivables, it can lead to huge problems. So by nature, small and mid-sized businesses are more fragile than the large companies. So unless we are able to get visibility about their future, I think that one should be very, very measured in looking at these opportunities at this point in time.